Good morning, traders. This is Aaron Hill with another edition of Technical Talk. It's Monday, the 18th of October, and time is now 7:50 a.m. GMT. In terms of early data, China GBPUSD, this is the growth value for giving us the quarterly value compared to the same quarter a year earlier. Tells us gross domestic product grew by 4.9% in the third quarter from a year ago, missing expectations of around 5%. 5%. China retail sales year on year, however, increased by 4.4%, taking on economists' forecasts of 3.5%. As a reminder, later on at 2:15 UK time, we have US industrial production month over month and the business outlook survey from the Bank of Canada, that's the BOC, at 3:30 p.m. to look forward to. Right, so where are we as of current prices? The dollar index, a geometric weighted average of the dollar's value against a basket of 6 foreign currencies, trades modestly higher by around 0.2%. Euro pairs are mixed as of current trade. The euro dollar is down by is down 0.1% as of current trade. Pound pairs are faring a little better, while Aussie dollar pairs are largely on the back foot, responding to risk sentiment. And with this, we can also see safe haven currencies mostly lower this morning. So with that in mind, let's switch the focus over to the technical charts and see where we are currently positioned. So as you can see on the euro dollar, I won't go too much into the weekly time frame, but it's pretty self-explanatory. We are still trading around the upper edge of prime support at 1473, 1583. As I've said in previous analysis, there were likely long-term stops below the lows at this point here, which could help attract buyers to buy into that sell stop momentum. On the daily time frame, this is the daily time frame here, we have tested resistance at 1640, and if you zoom in, you will see that we formed back-to-back shooting star candlestick formations. As of now, we are trading relatively mildly lower, I guess, but any further downside from this point could attack Fibonacci support at 1420, 1522. Above this resistance this week, we are looking at Quasimodo support term resistance at 1689. Now, on the H4 time frame, for anyone that read my weekly technical market insights, you will note I highlighted the potential pennant pattern, which has broke to the downside. Ideally, we were looking for a continuation move to form above this resistance, but as you can see, that didn't occur. We have broken lower, and we are now watching support at 1563. Now, I also mentioned that if we do break below this H4 pennant pattern, we are likely going to push below this H1 support at 1584. We have done that, but we are rapidly coming back above that area. But ultimately, we are still looking at this demand at 1545, 1555, which is positioned just a touch below the H4 support mentioned above at 1563. Now on to the Aussie dollar. Again, we're coming off. We strongly come off prime extended recovery gains north of prime support at 69, 68, 72, 42. Now continued interest to the upside from this point here could eventually see us test prime resistance at 78.49, 75.99. But before doing so, we have to take into consideration we have prime resistance. This is the daily time frame, as you can see here. This is the daily time frame, and we have prime resistance at 75.06, 75.74 to contend with. if we overthrow this area, we are then looking at reasonably healthy resistance comprised of a Quasimodo support term resistance at 76.21 and 2 Fibonacci ratios along with the 200-day simple moving average, which is currently trading at 75.67. Now, with that, we also, our weekly technical market insight did say that we are looking, given the higher time frame direction, we believe that Quasimodo resistance on the H4 time frame and resistance on the H4 time frame, these come in at 74.41 by the way, and 74.26 are potentially fragile. And with that, we let me just check my notes. We did say that we could be seeing a bounce as such. These are from the notes as such between the H1 decision point at 73.82, 73.91, and the 74 handle. This could be this is an area. Do bear in mind this is an area including the H4 support at this point here. This might welcome a bullish phase, and as you can see, this has done that as of current prices. So with that being in mind, we could see a continuation rally form from this area, potentially attacking this H1 prime resistance and higher. Okay, switching over to the dollar yen and what a move that was last week. We had a 1.8% surge higher, and I think this was its fifth consecutive rally to higher prices. As you can see, though, we are now testing weekly resistance at 114.38. Whether this has enough grit to withstand buying pressure is very difficult to tell at this point. However, on the daily time frame, we are trading in overbought territory on the relative strength index, and that's the RSI. And we also have interesting resistance formed by, let me just expand these charts, formed by two closely converging 1.272%, I believe. These are projections. Sorry, we have a 1.272% projection and a 1.272% Fibonacci expansion, as well as you can see, a very deep 78.6% Fibonacci retracement coming in at 114.93. So these are certainly areas to be aware of today, as you can see, combined closely with the weekly resistance on the resistance on the weekly time frame at, as I said, 114.38. Now, we did early Friday, we did break out of this ascending triangle formation and touch gloves with the weekly resistance, as I've just mentioned, at 114.38. This is the H4 time frame. Now, we're also testing H4 channel resistance, and this is taken from the high 112.05. So we do have some confluence here, and do bear in mind the profit objective for the ascending triangle comes in around the 114.63, I believe, mark. So do be aware of that today. So together we have reasonably, as I said, reasonable confluence in terms of resistance here. And on the H1 time frame, this is at this point here, we have recently bounced from the 114 figure on the as you can see on the H1 time frame, and are now approaching the 1.618% Fibonacci projection at 114.49. Now, all in all, I did mention in the weekly technical market insight that weekly resistance does certainly deserve mention, as does the daily time frames Fibonacci cluster. So, but in similar fashion, as I'm looking at my notes, in similar fashion to the big picture, a healthy cocktail of resistance is evident on the H1 and H4 time frames, as I've explained. Between the H4 descent, with that being in mind, between the H4 ascending triangle Profit objective at 114.63. The H4 channel resistance at around 114.38. And the H1 Fibonacci projection at 114.49. We have some short-term resistance to work with between this area, and do bear in mind this is positioned between the higher time frame resistances between 114.94, which, if you remember, is the daily time frame 78.6% Fibonacci retracement ratio, and 114.38, which is the weekly resistance. So do be aware of these areas today. Now, finally, onto the pound dollar. We have seen some. We did see a reasonable recovery rally form last week, up by 1%, and this had, as you can see on the weekly time frame, this occurred following the following price probing below supply to demand at 36.29, 34.56. But on the weekly time frame, as I hope you can see, we are approaching trend line resistance, which is closely joined by the 200-day simple moving average at currently at 38.42. Now, with that in mind, we also have H4 resistance formed of Fibonacci ratios coming in between 38.07 and 37.85. So do be aware of these resistances, which, as you can see, converge closely with the daily trendline resistance. So do be aware of these going forward. With that in mind, we may also see price on the H1 time frame crack through resistance at 36. This is the H1 time frame. Crack through the 37.64 resistance level to reach the 138 figure, which actually converges with a 200% Fibonacci extension and a nearby 100% Fibonacci projection at 38.13. What's interesting, though, is these two levels on the H1 time frame share chart space with the H4 resistance, which, as we already know, also shares chart space with the daily trendline resistance. So together, we have a reason. We are looking at the 138 handle this week to form potential resistance in this market, which coincides with the double top pattern formed on the weekly time frame, and that comes in between at 42.41, which broke its neckline when was that? Mid-August of this year. So yeah, on the Dixie, just really quickly, the dollar index, we are coming off support, which is a previous Quasimodo resistance at 93.90. Now, I did note in the weekly market technical market insight, we are watching this point of convergence here, which is formed via a trend line support and a decision point at 92.71, 92.53. So if we do get down to here, do take into account this area here as it forms potentially, potentially high probability confluence. Now, that's it from me today, traders. I hope we all have a productive session going forward, and I'll catch you all on Friday.